Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to share with you a market outlook. As we sit here in mid May, the idea is that we're in the midst of planting season. It's running a bit behind what we would like to see. And it's at this time, too, that we get USDA's first official estimates for the growing crop. And so those were shared on the 12th of May. And so the market's had at least a day to digest that. And so working that into market prices as we look out there. And when we look at what USDA provided us as we look out into 2022, what they found was basically that in this case, for corn, there is concern about the delays in planting impacting overall production. In fact, as USDA looked at the corn crop this year, this is one of the rare years where they started off here in May with an adjustment to yields as we look out for 2022. So as you look at the 2022 column here, it's a brand new set of numbers that USDA released here. It's based upon the March planting intention, so we're looking at 89.5 million acres of corn to be planted this year, but given the delays in planting, they've lowered their yield from 181 to 177. Now that 4 bushel per acre adjustment there knocks off about 325 million bushels to the production total. So we are looking at production coming in just shy of 14.5 billion bushels, which would make it, you know, comparable to what we saw in 2018, but much below what we had last year. So supplies are pulling back a bit from what we've seen over the past couple of years. Now, when we look at demand, USDA's had to adjust those usage sectors as well to reflect this lower availability of corn. The biggest adjustment that they made there was on the feed and residual side. They did pull those numbers down, as you can see, comparing 2021 to 2022. We're talking about 275 million bushel decrease in feed and residual usage. They had held ethanol usage flat based upon basically fuel usage as we look out right now. Food, seed, and other rising a little bit, but the big number I was watching for on the demand side here is the export line. And what USDA is showing here is a 100 million bushel decrease in exports, but that's actually better than what they had been showing earlier in the year when we were looking at a much larger drop in exports. And a lot of that export rise, if you will, is due to the war in Ukraine and concerns about global feed usage as we look out here, especially the lack of wheat likely coming out of the Black Sea region. Combine all this together, you're looking at ending stocks continuing to shrink and prices continuing to rise. In fact, USDA not only put out that new number for 2022, but they ended up raising the price number for 2021. They raised it 10 cents to 5.90 a bushel, and they announced the new price for 22 of $6.75 a bushel. So very strong prices as we look at the corn market. Now, switching over to soybeans, here USDA recognized that there's delayed planting with soybeans as well, but there's not enough of a delay for them to make a yield adjustment here. The numbers work this way. We're planting 91 million acres of soybeans across the country at trend line yields of 51.5 bushels. That produces a little over 4.6 billion bushels of soybeans. So supplies will be as large as they've been over the past few years. So we've got nearly 5 billion bushels of beans to work with. Demand for those beans, though, is fairly strong as well. In fact, USDA saw increased domestic crush here as we use more soybean, not only as a feed, but mainly we're looking at growth on the oil side of the market. So the vegetable oil market, the biofuel market, helping push that domestic usage along. And then we continue to see exports coming back. And one of the key features here is going to be China as we look out there. But USDA bumping those exports up 60 million bushels as well. So we've got large use over 4.5 billion bushels there. We do see ending stocks building a little bit here, but they're still relatively tight compared to overall usage in USDA, reflecting that tightness in the market overall by maintaining not only the 2021 price at $3.25 a bushel, but bumping up that 2022 price to 14.40. So both crops are staring at some of the best prices they've ever seen, basically harkening back to about a decade ago. 2012, 2013 would have been the last time we saw prices of this magnitude being posted by USDA. Now, sort of getting into how they got there, how did they arrive at these numbers? First thing we're looking at is planting progress. And in this case, this graph can show you sort of the scale of the range of values we've seen since 1980. The light blue area on this graph shows you how quickly and how slowly the corn crop has gone in a given year. The red line here is where we're at in 2022. So you can see it's been a very slow year. In fact, there are only 4 years in that entirety of data there, nearly 50 years, that fall below what we've seen here in 2022. And in all 4 of those years, we ended up with below trend line yields. So that's some of the supporting data that USDA utilized in making their yield adjustment. Now, the graph also shows that basically if we do get a good week or two, we can plant the vast majority of this crop, and that's the hope that we're sort of in that period right now. But this will be something that the market will be watching for on the next couple of Mondays as we get that crop progress report coming out indicating how quickly the planting is going. Now, like I say, soybeans was also delayed, as you can see here, but the gap is not nearly as large. And the idea is that we do have a longer period of time to get that soybean crop into the ground. So USDA is less worried about the potential for trendline yields. In fact, when we look at the 5 historical years that line up the best with the progress we've seen here in 2022, what you find is that 3 of those years had below trend line yields, but the other 2 had above trend line. So there's still an argument to be made that trend is definitely possible for our national soybean yield. The other big thing beyond the planting progress, though, is looking at the situation globally, especially when it links to the Ukrainian war, and that production of grain usually comes out of the Black Sea region. USDA updated their forecast there as well, and what they're showing is a 35 to 55% reduction in Ukrainian production due to the war. And so this is looking at the 3 major crops that come out of Ukraine: sunflowers, wheat, and corn. And again, what we're seeing there, 35 to 55% decline. So that's putting a fairly large hole, if you will, in global supplies that the US and South America would likely have to make up. The challenge is going to be, how quickly can we do that? And then also in this case, given that this is sending prices significantly higher, how much demand adjustment do we see in the global marketplace? Now, the war's been going on for a couple of months now. We have seen some export shifts already occurring. Arguably in the oilseed markets, we have seen additional sales coming in from the rest of the world. As we look at soybean exports to finish out here the 2021 marketing year, we've seen that the scale of purchases increase here in the latter half of the marketing year, reflecting those additional sales that usually go to either other oil seeds or other markets, turning to U.S. soybeans. On the other hand, the corn market hasn't really found that additional growth yet. There's an idea that we'll remain above average in terms of that demand. As you look here, the red line for 2021 is exceeding our 5-year average. We'll likely hang on to a lot of that demand, but we haven't seen any really surges in additional demand due to the relative lack of grains outside the U.S. But when you put those pieces all together, what you get is a market that remains incredibly strong for producers out there, with nearby corn futures floating around the $8 range and harvest time futures holding pretty solidly in that 725 to 750 range. And so when I look at the futures based estimates for season average prices, where USDA is currently at 675 for the 2022 crop. Futures are already above that. In fact, they're above 725 right now as it stands here on May 15th. And that strength lingers on as we look all the way out into the 2023 crop. When we're looking at soybeans, we've got very strong nearby prices reflecting that surge in export demand as we look out there. Now, prices tail off as we head towards harvest, but we're still talking about harvest time futures of nearly $15. So, again, some very strong harvest time prices here. And again, that strength holds on as we look out into 2023. The comparison here, though, is a bit tighter in that USDA projected a 14.40 price, and the market is fairly close to that at 14.55. So we do see some agreement here. And in both cases, the markets, though, being a bit more bullish as we look out on our crop markets than what USDA is at currently. And so the things we're watching for, I would say, over the next couple of weeks would be one, planting progress, especially as it goes on with corn. But the other thing I'm probably watching are the export picture, especially as I look at soybeans here. While we've seen some additional growth there, there are concerns, especially as we look into China, about how they're handling COVID and how those COVID lockdowns might hamper that export demand as we move through the latter half of 2022. With that, I do want to thank you for your time and investing your time in this video, looking at the crop markets as we stand today. We'll provide another update on this as we move to the June WASDE report, and especially as we look towards the June acreage report, which will finally, if you will, put some confirmation on just how much land got planted to corn and soybeans this year. With that, again, my name is Chad Hart, Extension Economist with Iowa State University, and thank you for your time.